Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Triple Q report for Tuesday, January 25th, 2022. Before we jump into today's charts, just as usual, want to encourage you to please click like each and every time you watch the daily Triple Q report and subscribe. Subscribing to the Wicked Stocks YouTube channel will notify you each and every time new content has been uploaded, including the daily Triple Q report. So if you're notified, certainly before the opening bell of that particular session, you have the information when it's fresh, relevant, and usable. So subscribe and like, please. Let's jump into today's charts. How do I phrase this? We settled last Wednesday. Let's walk back a little bit, I suppose. Last Wednesday, we had the 3 to 5 week sell signal by closing below the formation that today is at 372.52. And in almost as many days, we are closing in or have closed in. We bounced nicely, obviously, on Monday, and we actually closed higher on the day. So there is a case to be made for regaining lost ground as we continue into later week. But this picture still needs to be emphasized that rallies into the low 370s should be considered sell opportunities for the Triple Q, and below which we can, I'm just going to say by the end of February or sooner, test the 323.77 long-term channel bottom. Now, on Monday, we certainly spiked through that rising 1/3 speed line. It's still there at 344.10. It can contain daily selling pressures, and above which we can test today quite easily 357.80. In fact, those are the two day trade parameters, 357.80 upside and 344.10 downside. Let's take a look at the support and resistance for today. You can see 357.80 above the market, 344.10 below the market. We could trade inside that zone perhaps early in the day, possibly the day itself. And inside of that, we have a 351.69, kind of a soft pivot point. So above 351.69, expect 357.80. Breaking 351.69, expect 344.10. Now, if we push through 357.80, then we should reach 366.48 intraday, possibly 372.52. That would be quite a rally. It is possible if we push today, especially if we open today above 357.80, we can reach 372.52, and that is that long-term channel bottom, once again, that can contain buying through February, and below which, or once tested, 323.77 in reach within 3 to 5 weeks. If we do close above 372.52, I'm going to say a good Q1 low. I don't see excessive price acceleration, though, to the upside, excessive recovery. Excessive is the wrong word. Let's just put aggressive recovery, accelerated recovery until we close above the 380-322 area. It's almost a moot point right now. I don't anticipate seeing that today, but it is possible that we could reach 372.52 today once again if we push through that 357.80. That's actually a descending 1/3 speed line. And so there you have it. If we were to close above 383.22 over the next week or two, not only do we have a good Q1 low, but price acceleration into the 410s, 420s within 3 to 5 weeks. But so off the mark right now in terms of where we are. This is still a market that can be sold at 372.52 if you're a 3 to 5 week time frame trader. And I'm still anticipating the 320s. Let's take a look at the downside today. That if we do break 344.10, which once again is that rising 1/3 speed line. That's a long-term speed line, and it can contain daily selling pressures, and it is a downward pivot point into later week if we close below it. But if we break 344.10 today, then 334.15, nothing more than Monday's low, is in reach, and we could bottom out there for the day itself. I mean, you can just one close look at this chart. If you comb through all the activity over the last year or two, you see plain and simple that there are many, many, many examples of double top consecutive daily highs, roughly speaking. So, if we break 344.10, yesterday's low, Monday's low at 334.15 is likely. And once again, if we close below 344.10 today, I do think we should, within the week, possibly on Wednesday, test that 323.77 target. And yes, it remains a target, 323.77, able to contain selling through the year. And from here, we can push higher on to new highs perhaps as we get into mid-year or sooner. Now I'm going to say a thing about what if we do close below 323.77. I really don't want to go there. What I really want to emphasize is I will then be keeping one eye on the SPY. The SPY has yet to come close to testing its targeted long-term support. And yes, I'll let you watch the daily SPY report. Despite yesterday's late rally, despite yesterday's positive settlement on the day, I still need to see this entity close above 440.92 on Tuesday to show follow-through buying into later week and even into February trade. But holding below 440.92 in the SPY, still maintaining a mid to upper 390s objective. And why I'm driving this home is if we do settle any day, say this week, in the QQQ below the 323.77 long-term support level, I will outline targets, certainly. But the target really for me then will be, let's see what happens in the SPY in the mid to upper 390s, because I can't envision, the QQQ continuing in sort of protracted sell-off as we continue into later February if it closes below its 323.77 level and not pay attention to the fact that the SPY could put out a long-term low in the mid to upper 390s. In fact, that is what would be expected. So we'll watch the SPY if the QQQ closes below 323.77. Until then, I'm just going to leave you with the support and resistance for today. You can read everything. Everything is carefully chosen in terms of intraday targets and pivot points into February and buy signals, so forth and so on. Please click like if you haven't already, and please subscribe to the Wicked Stocks YouTube channel. I'll be back tomorrow for Wednesday's daily QQQ report. You have a great day.